looking at US30, the first thing is the market structure is bullish, creating higher highs, a higher low, a higher high, a higher low, a higher high, a higher low, and then a higher high. So whatever price is doing coming down here, I'm going to be looking for buy opportunities to continue higher. Now, let me show you something interesting as well. If you're measuring from this low to this high,
Yeah.
21%. This is 21%. So price coming down here, if I'm buying, I'm looking for at least a 10.5% take profit. And right here, it delivered a 13%. So my take profit would have been hit. So 13.7%, if I'm buying from here, my take profit would be at least a 6.5%. Finally ended up delivering a 23%, which is incredible, beautiful. So that means if I'm buying from here, I'll be aiming for an 11.5% take profit. And right here, we delivered 21%. So my take profit would have been smashed.
Smash.
So price coming down here now, whatever we bottom out and create a new low, I'll be targeting a 10.5%. And where would 10.5% be? Literally the all-time high. So now I know that whichever trade I'm getting into, I'll be targeting the all-time high from here. Good. The next thing I do is I use my Fibonacci to draw from this low to this high to derive my equilibrium.
Yeah.
And right here we have equilibrium. So now I can see the equilibrium zone. What I would now do is I'll be looking for a point of interest below equilibrium. Below equilibrium. Now, if we go to 3-month time frame, we can see that on the 3-month time frame, we can already see a 3-month fair value gap resting right there.
Right there, yeah.
The next thing, we go to weekly time frame, and on weekly time frame, we can see a very small fair value gap in here, but that's not enough for me. I still want to see something even much better than just that. And then on this time frame on daily, I can now see clearly there's a fair value gap from here to here. You can see the fair value gap here and here, right?
Yeah.
So I outlined the fair value gap, and the next thing I want to see is a break of structure on the 30 minutes time frame.
Yeah.
So right here, I have our daily fair value gap. We now scale down to 4-hour time frame, and we'll go down to 1-hour time frame. So I'll just stick to my 30 minutes break of structure and outline the high, 30 minutes time frame, and also outline the low. And then I can just put an alert on the high and the low, and I'll wait until price breaks either the high or the low, and then I'll look for entries. Remember what we talked about. Our target is going to be the all-time high, right?
Yes.
Now look at what's resting at the all-time high. What is this resting at the all-time high here?
Low resistance liquidity, low hanging fruit.
Yeah, and also the low resistance liquidity.
Low resistance. Okay.
So right here, we'll have the low resistance liquidity resting right here. So all we do now is look for buy opportunities and target that area.